introduce Lisa Rodriguez. She's the director of retail accounts from NuView. She's going to talk about how to buy more real estate using your IRAs. And this is a great topic. And we're so happy to have Lisa on at the High Performance Segment. Welcome, Lisa.
Thank you so much. I appreciate the opportunity. And I appreciate those of you that are taking time out of your Sunday to be here. So thanks, Jason.
No, welcome. So I'm going to turn it over to you, Lisa, and you can share your screen with everyone in the audience as well. So here we go. Lisa Rodriguez, welcome.
Thank you. Give me just a moment to get my screen share working. A self-directed IRA or your solo QRP or solo 401k. If you would all use the chat function just to tell me where you're from so I know where you are. I saw Stacy said South Florida. Anyone else want to share? I'm actually in Central Florida and been here for about 7 years. Was born and raised in Miami, Florida, just to give you a little bit of background. And let's see here. Just to get into the presentation, I do want to say that I am not an attorney. I am not a CPA. NuView does not provide investment advice or endorse any products. We're actually not a fiduciary. So all information that we provide is for educational resources. And we do encourage you anytime you have an investment that you're seeking out, that you do your due diligence and that you speak with those that would give you the best advice. So NuView Trust Company, we are a custodian just like Schwab and Fidelity, TD Ameritrade, and those companies. The difference is that with those companies, you can use your IRAs or your individual retirement accounts to invest in things like stocks, bonds, mutual funds. With NuView, you actually have the opportunity to invest your IRAs into alternative investments such as real estate or private lending, private stock, and we'll get a little bit deeper into that later. But I just want you to start thinking about that. So for those of you that might have an old 401k laying around, or unfortunately might have been laid off during COVID, those are funds that you can actually roll into an IRA with NuView and start utilizing those funds to get returns on your investment. So we have been in business since 2003, and we have 2 offices. One is in South Dakota, that's our compliance office. And then our administrative office is here in Florida, in Longwood, Florida. For those of you that know, we are about half an hour away from Disney. So that's a good reference point. Most people know where that is. And we currently custody $1.5 billion in client assets, have about 10,000 clients. And what we pride ourselves on is being simple, available, and responsive. And we want to earn a relationship with our clients. We have a staff meeting every Monday. We talk about how many people actually got a live person on the phone. So when you call our office, there is a tree that's going to ask you, existing client, new client, those kind of things. But once you pick, 98% of the time or more, the phones are answered with a live person. So we pride ourselves on that. And our core values are very important to us as well. Our 4 core values are passion, integrity, serving others, and accountability. So we do use that also in our everyday practices here at NuView. So this picture right here reminds me of me and probably many of you, right? I would say that I would consider myself pretty financially savvy, but I can tell you that I don't really know or understand the stock market. And so for me, when I think about the stock market, I kind of compare it to casino, right? So for example, you go and you're at the blackjack table and you might be doing really well. You're, going and going, you're on a run, you're doing well. And then what happens the next hand, it's bad. The dealer wins, you're losing, and either you walk away or you stay there and you try to make your money back. And it goes on and on. But this right here just kind of shows what most people's feelings are. I mean, they usually put their money with someone that they trust or an advisor that they feel has done a good job in the past and would probably do a good job for them. But do you really understand what's going on with your money? And for those of you that are real estate investors or realtors, I want to bring this up to you because I think that people don't know that being able to invest in real estate with your IRA is an option. I didn't know that it was an option. So, and I was in the insurance industry for 19 years. I actually worked with a lot of real estate investors, realtors, lenders. That's how I built my business. I owned my own agency for 5 years. And I didn't know that this existed. And had I known 10 or 20 years ago, which I hear that very often, if I only knew that this existed, I'd be in such a better position than I am now. So my job is to go around and talk to you about the opportunity and the availability, and it has been around since the 70s. But in my opinion, it's the best kept secret, right? So let's go ahead and continue. This slide, I would like to speak to you about an example, right? And why should you do real estate investing in your IRA, right? What is the reason? And I'll tell you that the reason is the power of compound earnings, right? So right now you have a deal. Let's just say that you found this amazing deal. You have $1 and you're going to invest that dollar, and every year that dollar is going to double. And so for 20 years, your dollar is doubling. So $1 to $2, $2 to $4, $4 to $8. After a span of 20 years, you're going to have $72,000. So anybody that turns $1 into $72,000 in a 20-year time frame is going to be really excited about that, right? I'm going to share it with all my other real estate investment friends, and we're going to have, conversation, and we're going to be happy about that investment. And that dollar truly doesn't turn into $2, right? If you look at that table there, that dollar actually turns into $1.75 because Uncle Sam's going to come and take 25% of your earnings. And then the same $2 or $1.75 doesn't turn into $4, right? It turns into $3.06. And you can see the numbers as you go. But I'd like to call everybody's attention to the chat function, right? Because in the chat function, I want you to tell me, if I were to do this same deal, dollar doubling every year for 20 years, and I took it and I did it inside of a Roth IRA account, what would that dollar turn into after 20 years? So if anybody go to the chat now and just kind of guess, put a guess in there, it's okay. I'm going to just give it a couple seconds here so we can do that, and you can see what you think it would be: $1, $2, $2, $4, so forth, so on, in a Roth. All right, so give me 1 second. So if I put it in a Roth, that same dollar doubling over 20 years is actually going to turn into $1,048,000. $1 million. So I don't know about you, but I want to be the investor that says, I actually did this deal inside of my Roth IRA, and rather than making $72,000 after 20 years, I walked away with $1,048,000. The same dollar, same investment, same time frame, different outcome, right? If I took that same dollar and I did it inside of a traditional IRA, so traditional IRA is a pre-tax account, the Roth IRA is a post-tax account. If I did it inside of a pre-tax account, and then when it came time for distribution, let's say I took the full million at once, maybe I'm taxed at a 40% tax bracket, I'm still going to walk away with about $600,000. Again, compare it to doing what you're already doing, right? You're investing outside of your IRA, you're making $72,000, but consider walking away with $600,000 or over $1 million. And that's the difference with investing outside of your IRA versus investing inside of your IRA. So let's look at the different account types and what their contribution limits are. So we talked about IRAs, individual retirement accounts, right? So some of you have 401ks, you're a W-2 employee, and you can, if you leave that job, if you get laid off or something happens, then you can usually, you would take your 401k with you and you could roll it into an IRA. We talked about that earlier. For some of you, you can actually have a 401k and also have an IRA separately, right? So you can contribute either $6,000 or $7,000 depending on, your age, right? And I'll go through the contribution limits here, but I don't want the contribution limits to get confused with what you're allowed to roll into an IRA or what you can transfer into an IRA. So if you have a traditional IRA with Fidelity or Schwab or any of those companies, and you decided that, you know, the stock market's a little bit too volatile for me, I really want to get out of it, I don't want to do that anymore, I want to get into something that I have experience with and that I have knowledge on, and I want to start investing in real estate, well, you can transfer those funds to NuView and open an IRA with NuView. Same type of IRA. If you have a traditional and you want to bring it over as a traditional IRA, you can do that. And you don't have to bring all the money. If you have $500,000 in an IRA account and you want to bring $250,000, you can do that too. So don't confuse contribution limit with rollover or transfer limits. Contribution limits are specific to how much you can contribute to an IRA on an annual basis. So for traditional IRAs, it's the $6,000 or $7,000 depending on age. And the traditional IRA is going to be your pre-tax dollars. Okay, so if you make $100,000 and you want to contribute $15,000 to an IRA, you can try to see what the, or actually not 15, sorry, $6,000 to the IRA, then you would actually have a deduction on your taxes for the $6,000, right? The Roth IRA is post-tax dollars. So you've already paid taxes on this dollars. Now you're using it for post-tax dollars, and that's what you're contributing to your Roth IRA, and you won't see a tax deduction for that. The SEP and the Simple are usually for business owners that have employees, want to, you know, beef up their retirement alongside of their employees. The health savings account, anyone that has a high deductible health plan is eligible to have a health savings account. And yes, you can self-direct those as well. Educational savings account, some known as Coverdale. Again, you can self-direct those accounts, and people, usually parents, grandparents, aunts and uncles, establish those accounts for children for their educational savings. So those are all products that we offer here at NuView, and those are all accounts that you can self-direct. Now, the solo QRP, also known as solo 401k, is a great plan as well, and we do offer those. You can adopt a plan here at NuView for your business. And the contribution limits are a lot higher, right? So $19,500 is your employee contribution, and $26,000, I'm sorry, and you can do up to $57,000 on your employer contribution, and that's total, including employer and employee contribution. So solo QRP is good for business owners and individuals that have self-employment income. They don't have any common law employees, so no employees that work over 1,000 hours a year. And it can be adopted by any self-employed business, including sole proprietorships, LLCs, C Corps, S Corps. So it's a really good plan for anyone that is self-employed, realtors, landscapers, engineers, consultants that don't have common law employees, sometimes mom and pop shops. These are great for the solo 401k plans. They were established because, you know, a lot of the smaller companies don't have the money to establish these solo 401k plans like the larger companies do, and you know, they still wanted to have opportunity to save for retirement purposes. So that's what the solo QRP, solo 401k plan is, and those plans you can also self-direct. You can self-direct and you can invest in stocks, bonds, mutual funds. If you open that 401k bank account at a brokerage firm, you can do both. So very versatile plan. I recommend, if you're self-employed and are eligible, to look further into that plan. It's a great opportunity for you. Here are the benefits. So the solo QRP, you would be exempt from UDFI taxes when you're buying real estate with leveraged debt. So if you take a loan alongside of your solo 401k plan, you know, the money that is not in the plan in an IRA is generally taxed with UDFI taxes. In a solo 401k plan, when you're purchasing real estate and you're using leverage or debt to acquire that real estate, in the solo QRP, you do not have that UDFI tax. So also has the highest Roth contributions. You can contribute up to $19,500 towards Roth contributions. There's no mandatory reporting to the IRS until the balance of that plan is $250,000. You get automatic checkbook control, so you have the control of the account and you can write a check on the spot if you're like Mike was talking about with tax deeds and tax liens. If you're at the auction, you can write a check immediately using the bank account that you established with your 401k plan. So the other thing is with solo QRPs or solo 401ks, you can borrow, take a loan, personal loan on your own money, right, in your plan, up to 50% or max out at $50,000. And I covered that you can invest in both traditional and alternative asset classes. So I like to think of the IRS as me when I was a mom with young children, right? So the IRS doesn't really tell you what you can do. They just want to tell you what your limitations are. So for me, when I was a mom of I have two boys, they're currently 7 and 9, but when they were smaller, and we would go to different places like my sister's house or my parents' house, I would have to tell them, you know, don't climb that, don't jump on that, don't open the refrigerator, don't, right? It's not do this or, you know, let's come over here and do this. It was more, don't do that, don't do that. And that's how I feel the IRS communicates with us, right? So I'm going to go over what the limitations are. There are few, but I still want to cover that with you because a lot of people have these questions immediately. So your IRA cannot purchase life insurance and it cannot purchase collectibles. So life insurance is for after you pass, IRAs are for retirement purposes, right? So that's one reason. And then collectibles, it's just very difficult to put a dollar amount on a collectible. You don't really, you know, there's different assessors or different appraisers that are out there, and everybody's going to have a different opinion of artwork or antiques or coin collections. So the IRS just doesn't really want to deal with that. And they say, you know what, we're just going to say these are the two limitations that we have for you. The other limitations are who can do business with your IRA, right? So yourself, your spouse, kids, grandkids, parents, grandparents, spouses of those individuals, and businesses that are owned by those individuals. That's the limitation. So as long as you're not doing business with them and your IRA or yourself and your IRA, then you're good. So for example, if you bought a property in the name of your IRA, you couldn't purchase that from your parents, right? Or you couldn't buy that property and then rent it to your children, right? Because it's too close. So I want to keep all your IRA deals at arm's length. And so just keep that in the back of your mind, okay? But those are the only limitations as far as people. So there's millions of other people that you can do business with your IRA. Let's talk about what you can invest using your IRAs here at NuView, alternative investments through self-directed IRAs, right? So real estate, so that's raw land, single family homes, apartment buildings, multifamily, commercial property, the list goes on and on. Private stock, so who out there likes to watch Shark Tank? I don't know, I'm a fan of Shark Tank. So let's just say that you have a friend that you know has invented a product and they're going to start up a business. You can actually go ahead, Jason says he likes Shark Tank. You can actually go and invest in that business. So that's another thing that you can do with a self-directed IRA. You can invest in partnerships, limited partnerships. If let's say that's, you know, there's a group of people that are raising capital to go make a real estate purchase for commercial property. And those are, you know, usually cost more than a single family property. So you can have partnerships, people joint venture. Maybe your strength is not going in and working on the property, which is good because we don't want you to do that when you buy a property in your IRA. But maybe the strength is that you have the money, but you have a really good trusted person that you know that's good at the flip side of it. Maybe they're a contractor or something. You can joint venture with them. You can lend the money. They can do the flip. You guys can agree on a percentage of return. And then when the property sells, that return goes back into your IRA. And that's how you grow it, right? Any expenses that a property incurs are paid from your IRA as well. So you can do tax liens and deeds. Mike, if you're still on, you know, that's another thing that you can use your self-directed IRA for. You can invest in LLCs. Again, a lot of, you know, sometimes when you're raising capital and you want to make bigger purchases, people go in it through LLCs. I've seen hotel purchases that way. Also precious metals. You can invest in things like gold, silver, And so we do have depositories that those metals are held in. And you can also be the bank. You can be a mortgage, a note holder for someone. You can lend them the money to go purchase a house, right? And what we're seeing a lot more of, is I'm getting more calls on this, is cryptocurrency. So you can actually take your IRA and invest in cryptocurrency. So this just kind of shows a little bit, like I was talking about, rehab, rental, storage units, multifamily, undeveloped land. I mean, the list goes on, but yes, you can invest in real estate using your IRA. So I wanted to illustrate what this looks like in an actual example. And for me, I thought this would be a home maybe in Central or North Florida. You can purchase it at $150,000. So let's just say that your IRA has $175,000 in it. You brought it over to NuView. You wanted to make a purchase. You found a house. And so you went ahead and purchased that house for $150,000. So you decide that you want to keep the house for a couple of years, see how it goes. You're going to charge $1,500 for rents. That's what the market value is in the area. So $1,500 a month times 12 months a year, you're making about $18,000 a year. Let's say that your property taxes and your insurance is going to cost you about $3,000. So you're walking away, let's say, about $15,000 a year. Now, do you have to pay capital gains when you purchase a property in your IRA? That answer is no, right? So you keep the house for 5 years. You're making $15,000 a year for 5 years. That brings you to $75,000. And after 5 years, you're like, okay, I liked it, but I want to get a bigger house in my IRA, or I want to do something else with that money. So you decide to sell it. And during that 5 years, your property appreciated to $200,000. So $200,000 minus what you paid for the property at $150,000, you're making $50,000 return of investment there. But you also made $75,000 over the 5 years. So your total profits are $125,000 in 5 years. And how much do you have to pay in capital gains? Zero, right? So all that money, the rents, they were going back into your IRA. Now, when you sold the house, that was going back in your IRA. If you had any expenses, let's say you needed to paint the house, or maybe the AC broke, you needed to pay that, you would use the money in your IRA to pay those expenses. But this is the power and how you would build it. The other thing, multi-party real estate deals, right? Again, buying a property at $135,000, you rehab it using $50,000. The after repair value is between $210,000 and $220,000. Your monthly rents are at $2,000. How can you make this purchase, right? You can do it through multiple people, like I talked before, mix of IRA and individual money. So let's say that your friend, real estate investor A, decides that they want to partner with you. You would split all expenses and income, however you set that up, whatever percentage of ownership, whether that's 50-50, 60-40, or you have 4 people in the deal at 25% each, you can do that. You can joint venture where party A buys the house, party B rehabs it. So we talked a little bit about that. And you split profits and you determine what that is ahead of time. You have a contract, so there's no going back and forth. And each party is allowed to have their specialty. And then you can also take a loan using your IRA. So let's say that you only had $100,000, but the house cost $200,000. You can actually take a loan. It's called a non-recourse loan using your IRA. And as I mentioned before, there is something called the unrelated debt finance income tax that you would pay. And that's only on the leverage portion of that, because your IRA, you have, the tax qualified money. And so you're not going to have to pay taxes on that for capital gains purposes and those kind of things. But if you do have leverage money, then you are subject to unrelated debt finance income tax. Oops, sorry. So let me ask you this. When you go downtown, anywhere, I saw somebody over here was from Ontario. I think somebody was in South Florida. Usually downtown, you see all these large buildings, right? And what do those large buildings have in common? Anybody want to answer? So the large buildings, they have their names on them. 90% of the time, they are banks, right? So there must be power in lending. If you see the skylines in downtown, you'll see that, right? So you can actually use your IRA to be the banker. You can lend your money And these are the things that you would control, right? So you would control the loan amount. You would control the interest rate. You would control whether it's going to be secured or non-secured. You're gonna control the interest rates, the length of the term, whether it's paid monthly, quarterly, annually, if there's going to be origination points charged, and again, that security that I was telling you. And we have clients that do non-secured notes, and we have clients that do secured notes. Again, it's your risk tolerance and how comfortable you are with the due diligence that you do or that your attorney does for you, right? So, but again, another opportunity is doing that lending, because you can secure it with the collateral of the house. So if something were to happen and they default on the loan, then you could essentially take the house over, sell it, fix it, or however you want to do it. So just those are the different options that you can do there. And then I just want to point out how large the IRA market is. So there is almost $11 trillion in assets in the IRA market. And for many of you, maybe today was the first time that you heard about self-directed IRAs and that you could do real estate purchases and loans out of it. But for many of you, maybe you are aware of this and you just didn't think about it in the perspective of, let's say that you're a real estate investor and you have money that you want to use to invest in a property, but maybe you don't have enough. Well, hey, many people that have either old 401ks that are just sitting there. Maybe there's a couple of friends of yours that that just got laid off or what have you. They have that retirement money, and you could be essentially having more deals or doing more transactions as a real estate agent with IRA money. So it's very important that you know that this exists, that it's out there, that people can use their money. So people that have always said, "Oh, I'd love to get in real estate, but I just don't have money." Maybe they do, and they don't know that they have the money. So wanted to bring that to your attention. And the other thing is, what does it cost to wait and not self-direct, right? So basically it's paying retail price for your investment. So if you're buying stocks, bonds, mutual funds, yeah, the market goes up, the market goes down, and you think you're getting a discount because the market goes down, but everybody else is paying those same prices, right? In real estate, you may know of someone that, God forbid, their spouse just died, their spouse was the caretaker of the property, they're not interested in doing that, so they may give you their home at a discounted rate. Mike talked about it, maybe they're in, jeopardy of foreclosure. So, there's a lot of things out there that you might be aware of that you would never know in the stock market because everything is, public and you can see the volatility. So you can move quickly on lending or other opportunities when you're using your IRA. If you already have your IRA set up, it takes 2 to 3 business days to review an investment and fund it. So, again, it's very quick. And you're paying commissions and fees to advisors, where here the self-direction is you. You're doing the due diligence, you're seeking out the investment, and you're telling us to fund it. So those are kind of, what it costs to wait. And then for NuView, right? So what does it cost to open an account? It's a $50 application fee, which we're actually waiving for anybody that's watched the presentation today that's interested in moving forward with getting an account open. So there's a $50 account opening fee. And then there are 2 fee schedules. One is based on number of assets in your account, and the other one is based on the account value. So we let you choose that and what's more convenient for you. For those of you that are interested in learning more about self-directed IRAs, you can go ahead and text SDIRA with your first and last name to 484848. You'll receive our self-directed IRA e-guide for free, and you can contact me. Right there is my phone number, my direct line at the office, our website, my email address. What I'd like to just kind of finish the presentation with is I'd like to invite you all to our virtual real estate investors summit that's going to be on March 16th and 17th. And so if you're interested in that, just shoot me an email and I'll get an invitation out to you. So any questions?
Great job, Lisa, for your presentation.
Thank you.
If you could put that information in the chat as well, just so everyone can see that in the chat, so they can reach out to get accounts set up with NuView and also come out to a summit on March 16th and 17th too. So that's awesome. Does anyone have any questions? Let me check the chat just to see if you have any questions. I don't see any Q&A right now, but this is a chance to ask Lisa some questions why we have Lisa here. She gave some great information on how to use IRA and self-directed IRA to really increase your wealth with your real estate investing. And so you want to take advantage of this opportunity and stuff like that to actually say questions before we bring on our next speaker. And again, I just want to say great job, Lisa, with your presentation. Awesome job.
Thank you. I appreciate it.
No worries. We appreciate having you on at the High Performance. That's some of you sharing your wealth and knowledge when it comes to IRAs and how people can use IRAs to invest in real estate and really leverage that, especially as a private money source where you're an investor. You're able to tap into other people's money and use IRAs to expand your business. It's just great because there's plenty of people out there that have accounts that are just earning 1% or less in the bank, that if you can show them a better way that they can earn 10% or 8% secured by real estate or whatever percentage, is a lot better than letting it sit in a bank account where it's less than 1%.
Yeah, about a third of our clients invest in real estate. A third are note investors or, lending money. And then the other third are, investing in funds or crypto or precious metals and, those kind of things. So
there's a question actually, Lisa. Is there a difference between a QRP and a self-directed IRA?
Yes, the QRP is an actual plan, and that's that 401 solo 401k plan. So you have to have self-employment income. With a traditional Roth IRA, you don't have to have self-employment income, and it's an actual account. So it's different. But feel free, we can have a chat offline with that. If you want to reach out to me, we can definitely discuss that in further detail.
No, that's fantastic. So yeah, that was a question from one of our members in the audience. So I just want to thank Lisa Rodriguez again for coming on a Sunday, sharing our knowledge in IRAs and self-directed IRAs and NuView. Thank you so much, Lisa.
Thank you.
Really appreciate that.
Have a wonderful day, everyone.